What is going on, trading family? I'm Tony Pollock with Real Life Trading. Today I wanted to spend a few minutes and talk to you about what a credit spread is and why there's such a great method of bringing in consistent monthly income from the markets. And I want to explain to you exactly how that's possible. I trade credit spreads every single day. It's my main method and strategy of paying my bills each month as a full-time trader. I have a masterclass that teaches you every detail of my strategies, how to find them, how to trade them, what to do when they go wrong, how to lose small, and how to capitalize and have these massive returns each year. My strategy averages 200 to 600% ROI each year with a 90% win rate. So if you'd like to learn that strategy, the link down below in this video, check it out. Go to my masterclass. I'll show you how to do all of that and help change your life. It's what brought me out of the dumps and able to trade full time by bringing in consistent income. And I'm going to show you exactly why they're able to do that. Why do they have a 90% win rate and give you that chance to bring in consistency? Most people have a good general sense of where the market will go. The problem is the timing. You have to be exact. So if we're going to play this with shares or with a long call, either way, I really like this candle down here off of support, building volume. It's beat up. I would say a bounce is coming in, right? And I would say a bounce is probably going to make it up to about 150, give or take, right? So let's say I went ahead and did something with a stop limit bullish. And with shares, calls, doesn't matter. My stop would go down here, down below the higher low. It makes sense, right? Got to have your risk. So let's throw in our little stop down here. And the problem with directional plays, so with shares or with just long call options in a bull move, you have to be exactly right. It has to move to your target to hit to make money. If it just goes sideways, you lose. If it goes down, you lose. You have to be not just right on the direction, but right on the timing of that. And this is what I would say was a pretty good setup. I like the new low. I like how well it was bought up. This is a trade I would take. So let's fast forward and see what happens. We're filled on that with a stop limit bullish. It starts to move. Things are looking good. Things are looking really good. Again, my target's around 150 for me to be able to make my money. At this point, I'm pretty depressed. And and there you go, stopped out. So this is where most people struggle with in the markets, right? I have a feeling and a hypothesis. This is where it's going to go. You have to be exactly correct. And especially as a new trader, it's really tough to be exactly correct. This is why even professional traders average about 50 to 55% win rate, because you very rarely will be exactly correct. Now, how does a credit spread change those numbers? How do you go from a 50-50 trader like this example to a 90% trader with a 90% win rate? Let's go back here in time a little bit, rewind it back to the exact same entry, the exact same everything, except with a credit spread, we are going to give ourselves a buffer to be wrong. So you don't have to be exactly correct. A credit spread involves doing two things. You're going to sell an option. So in this case, we're going to sell the 60, and then we are going to turn around and buy the 55. We're going to do them together as a vertical spread. So we have sold the 60, we've bought the 55. Again, I'm not going to go into details of every little thing. I'm going to teach you the basics, all right? Gas pedal means go, brake pedal means stop. The basics if I'm trying to teach someone how to drive a car. They don't need to know how an engine works, what happens after you press the gas, right? So all you need to know with a credit spread for a bull put spread is you win as long as the price stays above your sold strike. So in this instance, we win as long as the price stays above 60 by expiration. So if we sold this 30 days out, we win as long as the price after 30 days is above 60. If it gets below it and then back up above it, we still win. As long as it doesn't close below it by our expiration, we win. So you can already see the benefits of this, right? Credit spreads win if the price goes up. They win if the price goes kind of up. They win if the price goes sideways. They win if the price goes down. The only way we don't win necessarily is if the price just goes straight down. So you have to be dead wrong. So again, the reason why people are able to trade credit spreads so successfully is because you don't have to be perfectly correct. You just can't be dead wrong. So if that's the state that you're in your trading, credit spreads will completely change your P&L. Okay. So let me get a few of these things off so we can see it. And let's play this trade forward again, and you'll see the difference of buying long and trying to be exactly correct and credit spread method of I have myself a buffer room. I just need to not be dead wrong. So we're going to fast forward this, and it only lasts for 30 days. So right there, we win. You notice realistically, this went nowhere. It's straight sideways, and we won full premium capture. My average credit spread win with 10 contracts is about $700. So I made more in this trade without the stock even doing anything in 30 days. Done. I won that on this trade $700 when most people buying calls would have made about $700 if it got above 172, of course, depending on the size that you actually did. So I hope this little example show you why credit spreads are so effective, because you don't have to be perfectly correct. You just have to not be dead wrong, right? And there are some drawbacks with credit spreads. You're risking a lot more than you're making, right? Like I'm going to risk $5,000 to make that $700. But again, with my credit spread plan, I've developed a hedging strategy so that I can offset my losses. I'll teach you exactly how to do all of that and turn my losing trades when I'm dead wrong into winners. So again, you can find all that in the link below in this YouTube video, but put credit spreads into your portfolio. Find a way, find your own strategy, go learn my strategy, whatever you want to do, but it is, as you can see from this example, the easiest way to make money, because if you're generally correct, you'll win with credit spreads. And that's what gives you the 90% win rate. That's how you can bring in consistent income. And that's why I average thousands of dollars in profits every single week just by selling credit spreads instead of trying to be exactly correct with shares or with long options. So hit me up in comments below if you have any other questions. You'll see the link down there if you want to learn how I trade them. But put your own strategy on them. Put your own twist on them. Credit spreads are a great way to, like I said, bring in that money while you're looking to learn more about day trading, swing trading, whatever it is. While you're getting better at your timing of your entries, credit spreads will give you that buffer zone. You get a cushion to be wrong before you're actually losing on the trade, right? So I love you. Thanks for hanging out with me. Had fun. Again, drop some comments down below. If you have any questions, hit me up. Tony@reallifetrading.com is my email. Happy to help out. Hope you have a great rest of your day. Thanks for your time. We'll see you.